Welcome to Tax Insights, presented by Hawkins Ash CPAs.
Good morning, listeners, and welcome back to Tax Insights here on WOMT Radio. We are talking with Charlie for the past couple weeks here. Good morning, Charlie.
Good morning, Terry.
How are you, sir?
Excellent. How about yourself?
Can't complain. This is our last kind of like a three-part series that we've been doing for the past couple weeks, talking about the R&D tax credit, the research and development, and today on the final series here on the show, quantification and calculation. That's today's topic.
Yeah, and previously we had talked about the benefits of the R&D tax credit and how it's one of the most substantial incentives under U.S. tax law, and that many types of different businesses will qualify to be able to take it. Today we're going to go more in depth about some of the aspects of the R&D credit, including how to quantify the research being done and the basics of the credit calculation after determining the research is qualified based on the four-part test that we had talked about last week.
Yeah, so for those listeners that missed last week or don't remember all of the four parts, very briefly here, remind us again, what are the four-part tests?
Sure. The four-part test, in order to qualify an activity for the R&D tax credit, the activity needs to be for a permitted purpose. There has to be a process of experimentation. There needs to be an elimination of uncertainty, and the research needs to be technical in nature.
So if I have an activity that passes all of those, what expenses do I need to keep track of for this credit calculation?
There are three main areas of expenses to keep track of for the credit. Those expenses are wages, supplies, and contract research expenses.
So let's go a little bit in depth here on each of those, because I doubt that the IRS is going to make it very simple, right? So let me use all my wages for the tax credit, right? So go in depth here.
Yeah, it would be great if they would let us do that, but they're not going to let you use all the wages for the credit.
Yeah.
However, wages are still going to be the most likely driver behind the credit for expenses that qualify for it. The wages that you want to keep track of are of those employees who are involved in direct R&D. So those are like your engineers, your drafters, and your designers. The direct supervisor of those people involved that I just mentioned. The IRS says that you're able to count the wages of people one level above those people as supervisors on the organization chart, which works great for GM or Ford, but it's a bit more nebulous for small companies. What needs to be documented is proof that you are providing guidance to them through emails and notes from meetings or documenting conversations. Finally, the wages of direct support people qualify for the credit. Those include your prototype builders, your shop floor people, and the time for wages spent on production. Once you have all those wages wrangled up, you'll need to figure out how much time each of them spent on qualified R&D activities. If your company has like a time tracking by project, the IRS will love you for that. However, you're allowed to estimate, what percentage of a person's time was spent on R&D. The IRS can challenge the estimate under audit, but can't blatantly just throw it out.
So that covers the wages, but now what about supplies and contract services?
Compared to wages, those two areas are a bit more straightforward. Supply costs include any materials used in like prototypes, test runs, the wood, the metal, the materials, really anything it takes to get to the point where the uncertainty ends in the experimentation process. There is one exception for these costs, that is equipment, as the IRS specifically excludes it from being able to be used for the credit. However, the activities figuring out, what piece of equipment to buy may qualify for the credit. Now, as far as like the contract services, those expenses still count as long as they pass the four-part test, and you're the one that bears the economic risk if the experimentation doesn't work out. The only thing with that is you can't take 100% of them. The IRS makes you only be able to take, 65% of those expenses for the calculation of the credit.
So remind us again, how much of a tax credit do we get for all of this?
Generally, what we see is for each dollar spent on the qualified R&D, activities, a business would receive somewhere between 6.5 cents and 8.5 cents on the dollar back. The example I gave, in the first episode was if a business has $100,000 worth of R&D expenses, we would expect them to receive a credit between $6,500 and $8,500. Again, the expenses that are used to calculate the credit can be deducted like normal, and then those same expenses can be used to calculate the credit. It's one of those rare occurrences where you're able to double dip
Yeah.
on deductions. And then in addition, unlike a standard deduction, it's a dollar for dollar credit against your tax liability.
Well, Charlie, hey, I want to thank you for taking time over the past couple weeks to go over the R&D, the research and development tax credit with all of our listeners. Great information. I know within a couple minutes it's hard to cover everything, which is why we just want to continue to point people back to the team at Hawkins Ash. How do they do that? What's the best way of connecting with all of the experts at Hawkins Ash?
Yeah, you can find us at HawkinsAshCPAs.com. You can follow us on Twitter and like us on Facebook.
Charlie, thank you for your time, and we'll talk to Jeff next week here on Tax Insights.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at HawkinsAshCPAs.com. Hawkins Ash CPAs. Part of your business, part of your life.